Hi. Like most of you, I've been going through most of the material which we've received over the last week or so concerning changes which have been made in the government's federal budget, which was released by Treasurer Joe Hockey last Tuesday. I thought that there is so much material in here that I'd put together this short video with the aid of an infographic which will help you to digest some of the changes which might affect you. I've tried to make this as high level as possible and as general as possible because, of course, the information that's contained in the budget papers is very detailed. What I'd like to do here is to use this graphic to show you some of the major changes which might affect you and give you a little bit of explanation. If you need any further information in respect to the changes, please just get in contact with us. The first set of changes are in respect of small business. The government has announced it will significantly expand accelerated depreciation for small businesses. This has become known in the press as the tradie tax benefit. If you're a small business entity with an aggregate annual turnover of less than $2 million, you can immediately deduct the cost of any assets that cost less than $20,000. This is a significant increase in that threshold. It doesn't mean that you're able to get a tax deduction that you couldn't otherwise get, but it does mean that you can actually get the tax deduction more quickly. In addition, as expected, the government will deliver a tax cut to all small businesses that operate through companies by a 1.5% cut in the company tax rate to 28.5%. Remember that a small business, for the purposes of this definition, has less than $2 million of aggregated turnover. There were also some drought relief measures brought into play in respect of the budget from the 1st of July 2016. Capital expenditure associated with fencing and water will be fully tax deductible in the year that the cost is incurred. And in addition, the costs associated with the storage of fodder, for example silos, will be fully deductible over a 3-year period. There were also some significant changes which were made for aged Australians. The most important one, and probably the headline for the budget, was changes to the assets test free area and increases in the assets test taper rate for aged pensioners. By increasing the assets test free area, an estimated 170,000 pensioners will receive an increase. But there has also been a change in respect of the asset test taper rate. Currently, where a pension recipient has assessable assets that exceed the asset test free threshold, their pension is reduced by $1.50 for every 1,000 assets over the asset test free amount. From the 1st of January 2017, the taper rate will increase to $3 per 1,000. As a result, an estimated 91,000 Australians will lose their entitlement to the pension and a further 235,000 will receive a reduced pension. There have also been some changes in the way that residential aged care accommodation charges are dealt with. Residential aged care accommodation charges may be paid as a lump sum, or as a series of periodic payments, or as a combination of both. Where an aged care resident's former home is rented and they're paying their accommodation fees by way of a periodic payment, the rental income from the former home is presently not counted under the means-tested fee for aged care. For consistency, the rental income from the former home will be brought into account for aged care residents who pay all or part of their accommodation charge by way of a periodic payment. This change comes into effect from the 1st of January 2016. There are also some changes into the home care packages which are available to those people who choose to remain in their own home but are assessed as requiring some support. These will result in a streamlining of the way in which those packages are delivered. There were a number of personal tax measures also announced in the budget. As recently announced in the media, the budget contains a measure that will see families with children who've not been immunised no longer being eligible for subsidised childcare or the Family Tax Benefit A end-of-year supplement. Exemptions will of course apply for medical reasons, and this measure is due to apply from the 1st of January 2016. A measure that's colloquially been known as the backpacker tax means that temporary working holiday makers from the 1st of July 2016 will be treated as non-resident taxpayers. This means that they will pay income tax at a rate of 32.5% from their first dollar of income, as from the 1st of July 2016. The low income supplement is a payment of $300 made to eligible low income households. This supplement will cease from the 1st of July 2017. However, eligible recipients will still receive the energy supplement. There were also a number of changes announced in the budget in respect of the treatment of families. Recipients of Family Tax Benefit A will be limited to receive their benefit 6-week period each 12 months if they're overseas. This measure applies from the 1st of January 2016. A new childcare subsidy is also to be introduced from the 1st of July 2017. The current childcare rebate and childcare benefits will be abolished and replaced with a childcare subsidy. The proposed subsidy will cover up to 85% of childcare costs. The number of subsidised hours paid for each fortnight will be based on the work activity undertaken by the parents. The subsidy is designed to help parents get back into the workforce or to undertake other approved activities, including training, to further work activity opportunities. So, there's my quick summary of the changes which occurred in this year's budget. I hope you found it useful. If you did, please feel free to share it with your friends and colleagues. If you'd like a copy of the infographic which I've used as a reference throughout this video, please just send an email to the address which you see now on your screen. Thanks for your time.